Hello out there in America, Stan the Annuity Man, America's annuity agent licensed in all 50 states. That's including your state. What are we talking about today? The most popular product on the planet, the best thing since sliced bread, the greatest thing ever. It's too good to be true. It's fantastic. I went to the chicken dinner seminar and they told me about it. And it's called a fixed index annuity. Now, the good part is you have Stan the Annuity Man that's going to tell you about it, not some guy pitching it that's too good to be true. We're going to talk about fixed annuity and renewal rates on fixed annuities that I doubt if most agents even know what that is, but you need to know what that is before you even consider buying a fixed index annuity. So we're going to go through all the details, all the stuff, all this and that. Now, my producer is always saying, hey, tell this, because I tell them these stories off camera, like, you need to tell that story. Well, here's the story that she wanted me to tell. I went to the Air Force Academy a long time ago. Great institution of higher learning, but I'm not militaristic. I do nothing in moderation, but the bottom line is when I was at the Air Force Academy, actually the Air Force Academy Prep School is what they called it. It's where they sent all the athletes to get in line to go to the academy. I was ranked second in the whole school in demerits, and that's not easy to do. At the end of the, you have to make your bed and you have to you shine your shoes and all that stuff. At the end, I had so many demerits, I was just putting demerit slips on the bed and demerit slips on my shoes because I did not care at that point in time. So the question comes, hey, who was number one in demerits? You finished number two, and that's not good because I always like finishing number one. I'm the top agent in the country. That's number one. Who finished number one? You finished number two. My roommate. All right, that was a good story. Better story, Got Guarantees. Remember the Got Milk commercial? Producer, are you too young for that? Got Milk, remember that? See, if I was annuity czar for the day, for the year, for the month, I should be annuity czar. Whoever the president is should appoint me annuity czar over all things annuity, making all decisions on marketing, etc. This would be the marketing slogan. Now, there wouldn't be a milk mustache because that makes no sense. But Got Guarantees is what should be the annuity mantra because annuities are contractual guarantees. They're contractual guaranteed transfer of risk products issued by life insurance companies. So Got Guarantees should be, I like it. I actually tried to find the exact font that they use on the Got Milk. That's how obsessed I was to get this right. So let's talk about fixed index annuities because we need to get those right as well. Let's talk about what they are and what they are not, because most of the time we're pitched on what they're not. What they are not market products. They are not securities. They are not stock market growth products. They are not too good to be true. They are not one size fits all. They are not market upside with no downside. They're not, but that's how they're pitched. Indexed annuities, they used to be called equity indexed annuities, but now they're called fixed index, not indexed, index X annuities. FIAs were introduced in 1995 to compete with CD returns. And guess what they've done historically since 1995 in a raging bull market, going straight up? CD-type returns. Why? Because that's how they're designed. Now, how are the returns calculated? And this is where we get into the renewal rates part of an indexed annuity. Not all, because there's no the annuity industry is like herding cats. It's all kind of different. But in the indexed annuity world, the return is primarily, with most of the products, based on a call option on an index, like the S&P 500. What is a call option? It's actually a bet on where the price is going to go in the future. Let's just put it in English like that. So a call option on the S&P visually is, here's the contract anniversary date. So the S&P 500 is at X amount. And then this is next year's contract anniversary. And the S&P 500 grows, hopefully, from there to there. And so you take those, you subtract what it grew by, and then you get a portion, a limited portion of that return. Now, the good news is that return is locked in. The good news is that if the market goes in the toilet, an indexed annuity is a fixed annuity. You're not going to lose any money. That is good. I don't know why we don't talk about that, but everyone talks about stock market returns. That doesn't happen. Now, I'm not going to get into the weeds of how indexed annuity limitations are in place, but what they have things called caps, which is a limit on the upside, spreads, those type of things that every policy is different. But in essence, they're limiting the upside. And anyone that tells you you're going to get all of the upside of the S&P, they're just flat out lying to you. I mean, there's some limitation to that upside. And the problem is that a lot of annuity companies, not all, but a lot, will give you a very high limitation on that first year, okay? And then after that, that renewal rate, whatever they renew that limitation at, changes. And that's a problem. Okay, so why are renewal rates important with indexed annuities? Give you an example. Let's just say you bought a 10-year surrender charge fixed indexed annuity. That's fantastic. You know you're gonna get CD returns, but that first year, there's a really high limitation on the upside. So that's good. You're going to get if the markets move in the right direction, you're going to get a good return and locked in for that year. Here's the bad news though. When you buy a 10-year surrender charge product with a fixed index annuity, or 7 or whatever, but let's just say in this example it's 10, you're in essence buying a 1-year guarantee on that index call option, and then the other 9 years that you're in that product, you're at the discretion a little bit of that annuity carrier on what they renew those limitation caps, spreads, participation rates, etc. every single year. Me and you have no say in it. There's no negotiations with annuity companies on what those renewal rates will be. So you're really at the mercy of that annuity company on what they're going to put that renewal rate for the next year. And typically they'll send you a letter, it's like 30 days before the contract anniversary date, and you can choose, et cetera, et cetera. And there's all kinds of index option choices right now in the industry. There's over 700 index option choices. There's over 40 plus indexes to choose from, some of them made out of thin air that you've never heard of in your life, which is not good either. But the point is, you need to make sure, you need to check the renewal rate history, and we can do that at theannuityman.com. We have that information, we can share that with you. If the companies have been fair to their clients, fair to the consumer for those additional years after year one. That is very, very important, because what if they have a very kind of a teaser rate going into that first year? Hey, that could happen. That's fantastic. And then the next 9 years, they stick it to you. You do not want that to happen. Now, typically that doesn't happen a lot in the indexed annuity world because it's a competitive environment, but they have you at their mercy a little bit because you've signed that long-term surrender charge contract, and every year is a kind of a year-to-year renewal rate history. Now, to throw a little wrench in the engine a little bit, some index annuities have 2-year call options or 3-year call options. I've even seen them at 4-year call options, which means you can't change a thing during that time period. But most have 1-year call options, of which, again, you're at the mercy of the renewal rates. There's one more thing I've got to tell you about these renewal rates, and I'll do that in just 1 second. All right, I've done another video, I've done another video on index annuities you might want to watch. It's over the shoulder, because I do all these videos all the time. People always email me, hey, do a video on this, do a video on that. We're going to do the best we can, but shoot me an email at stan@theannuityman.com. One practice that's happening right now in the annuity industry that I do not totally agree with, I'm not going to say I hate, that's a strong word. Hate's a strong word, producer, don't you agree? It's a 4-letter word, you don't want to use it. But I don't like what's happening. In the index annuity world, a lot of what's happening is the companies will run algorithms or back tested to find a return. So they're looking for an actual return if you owned it 10 years ago. They'll find that return, they'll package it, they'll name this new index out of midair a name, and then they'll put it inside of the indexed annuity. And then the sales pitch is, well, if you'd owned this annuity with this index 10 years ago, your return would have been this. Well, that's kind of weird because the index just was created, meaning that it hadn't even been in existence for just a few months. And now you're telling me if I'd owned it 10 years ago, it would have done this. Some states have had it with that. In fact, there's a couple states that are suing or taking it through the legislative process of banning that practice, meaning that they want indices like the S&P 500 or the Russell or those type, NASDAQ, whatever. They want it to be in place 10 years, at least 10 years before it's included inside of an indexed annuity. I totally agree with that. I don't think games should be played like that, but you need to be careful when it comes to indexed annuities, the sales pitch, the dreams, the unicorns chasing the butterflies, the planets aligning themselves. Never, ever, 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 ever buy an index annuity for the hypothetical, theoretical, projected, back-tested, hopeful agent return scenario. They never come true, period. Indexed annuities are CD products. That's what they are. Hopefully you'll get a little bit better than CD returns, but that's what you should expect. If you go into it expecting market returns, you're going to be disappointed. But when you go into one and when you sign the contract, before you do that, before you sign the application, you need to look at the renewal rate history of that issuing carrier. And we can help you with that at theannuityman.com. Please go to my site. I've actually written a book on indexed annuities. I'd love to send you for free. We'll do that if you just provide your shipping information. And I do a ton of these videos. Hit subscribe because I do a bunch of these right now. If we can keep up the pace, we're doing one every single day, Monday through Friday, but I also do a weekly podcast. I write an article every day, and I do a blog pretty much every day as well. Trying to educate the public. I am the top agent. I would love you as a client. We represent all carriers, and I'm licensed in all 50 states. So interact with me. If you set a time for us to talk, it will be me, most likely you have on the phone. And I'll work with you to put together a customized plan and go through this index annuity process with you to make sure you fully understand it. And with that, I will see you on the next Stan the Annuity Man video.